trio, the Texas triple trio is back.
I like that.
Fellas?
With the Texas triple behind me.
Doing well.
Oh yeah, that is definitely the Texas triple. That's one of the projects that we just launched, and it is bomb. Did you know, fellas, that property is hitting about 18 grand this month?
That's incredible.
18 G's. One house, 18 G's.
Music to my ears. I was literally about to hit the Slack channel for the investor update information after this after we film this. So that's good to know up front.
I love it. Yeah, we can talk about that offline. So anyway, guys, we're here. It's real estate and coffee or coconut water. I don't know what it is, but we talk real estate here. We talk short-term rentals. And I'm excited to be back here with you fellas. I know we missed last week. But we're here every week showing you some love and breaking down some nuggets in real estate, talking about short-term rentals. And today we've got a really awesome topic, okay? It's investing in real estate partnerships. But before that, my name is George Salas. I'm a short-term rental operator and fund manager. I lead tons of masterminds, launched over 130 properties in the last 6 years, and I'm here dropping you some nuggets, and I've got my two partners. Let's go, fellas.
What's going on, guys? I'll jump in first. I'm Hollis from Hollis, Queens. So Hollis from Hollis. You guys don't know me. Real estate fund manager. I'm invested in short-term rentals, multifamily out west, doing some really cool conversion projects over there, and also an automations and AI expert, software engineer by trade. Really happy to be here and love just talking shop with these guys.
That's awesome. Yeah, so thank you. So my name is Brandon. My Instagram name is Brandon Cashflow. That's what people call me sometimes, or I guess I just call myself that. Who knows? But I got my start in the real estate space doing commercial real estate brokerage, a little bit of lending and property management, and also raised money for charity as well. So I wanted to use both of those skill sets together. Within the world of real estate, I am a GP on some multifamily out in the Midwest and getting into the short-term rental space with these fine gentlemen. So looking forward to it.
I love it. I love it. Cash flow never low.
By the way.
Yeah.
Yeah, that's your unique selling proposition. Cash flow never low. I love it. Yeah, in short-term rentals are all about cash flow. That works out perfect. So, all right, guys. Well, how about we talk some partnerships?
Definitely.
Yeah.
Let's talk about it.
Cool. I'll make the intro here. So, we're gonna talk high level, and we're gonna drop 3 strategies that we've used or we are using to scale our businesses, and then we're gonna leave you hanging for the next 3, right? Because that's how we do it. So you can come back next Friday or next week or leave us a comment that you want more. So remember right now, comment #I want more if you like this live stream. Okay. So why real estate partnerships? Well, I think real estate partnerships is the way to scale your business, especially if you've taken off, you've done a few deals, and you're really wanting to step up your real estate journey to the next level. I think partnerships is the way to go, because you can never do everything alone. You can only go so far alone, but you can go so much farther with someone else or more people than just yourself, right? So definitely. I like leveraging partnerships because of resources and expertise. You diversify your portfolio through partnerships because you can bring in certain skills and you can do more deals. You know what they say, right, gentlemen? It's better to own 2, 3, 5% of a lot of portfolios and a lot of properties that own 100% of 1 or 2 properties. So I'm all about partnerships, and I'm sure you are. I also love partnerships because you can mitigate risks, right? So what about you? Why do you fellas love partnerships?
You want to go first, Brandon?
Yeah, for sure. Well, there's a really a really great saying, right? It's 1 + 1 = 3. Now, obviously, logically, 1 + 1 obviously equals 2. But in the world of real estate, when you buy a property, you use a mortgage, you use leverage to buy the property. But you also can leverage partnerships to outsource what you don't know, because there's certain things that I know that Hollis may not know, that you don't know, George, but you guys know certain things within the world of real estate. Maybe it's underwriting, asset management, acquisitions that I don't know. And I think when you have all of these sort of skill sets that complement each other, it makes a whole, and it's much easier to close on deals because you're leveraging the expertise of other people.
Yeah, I think both of you guys hit the nail on the head. I mean, at the end of the day, you don't know what you don't know, and the problem with that is you will never know everything, right? So that just means that if you don't have partners, you'll just forever be behind the 8 ball, because there are all these things going on out there that you don't even know exist, that you don't even know you should be paying attention to or looking at. So I think partnerships create an excellent opportunity for that. And it really is one of the 5 laws of leverage, right? You think about money is a lever, technology is a lever, but people are a huge, huge lever, right? Like, for example, this property behind me, Texas Triple, it's in Houston, Texas. It's a short-term rental. George and I partnered together with that, with a few other partners. I haven't even been to this property yet, right? I would never have found this deal. George found this deal. I would never even know that this existed if it wasn't.
You used to live in Cyprus, but a decade ago.
Yeah, back in the day, before Houston consumed so much real estate space. Yeah. But yeah, I mean, it's a great way to. And the cool part about it, and the last thing I'll say is, when you partner, now you can take on completely different roles, and we'll get into that a little bit. But when you partner with other people, you don't necessarily have to be the person finding the property, or you don't have to be the person putting all the money in the property. When you partner, you can kind of pick and choose what you want to do. So that's really cool.
Hashtag nuggets, fellas, ladies and gents. Give me a hashtag nuggets if you're listening and you like this drop from Hollis and Brandon right here. So yeah, we've got way so many nuggets for you guys in partnerships, and I think like Hollis has just mentioned, we've got a deal going now between us 3. We also have another big deal going. Our funds are partnering together. We're doing deals, and we said, hey, look, why don't we just partner to offer value to our own community? So we are here bringing value to all of our communities. So our Facebook groups, our social medias, our YouTube channels, we're live here in all of our communities. So that's also a partnership, right? How do you offer more value? Because Hollis's community might not know a few things about partnerships, or maybe they don't know about short-term rentals, and I can come in and I run short-term rentals for so many years, right? And boom, they're going to learn. And I might not know something about AI technology, building infrastructure on the back end. By the way, Hollis is the G. We are working together on some amazing projects that don't have anything to do with real estate partnerships also, right? And we're leveraging his expertise, right? So, but anyway, that leads us to, how about we start with fractional partner, right? So we've got 3 partnerships to talk about today, and I know we're going to leave you hanging with the other 3. So we want to talk today about private lending partnerships, right? Dream partnerships, what I call dream partnerships, aka joint venture capital partnership, and a fractional partnership. But I like to start off with fractional partners. So fellas, what do you think of fractional partners? Maybe Brandon can start off, but we've got a fractional partnership between Hollis, myself, and a few others. We've got a fractional partnership happening in this big project you guys are seeing behind Hollis's back, which I'm jelly. I got another one of my properties right here, but I don't have that one awesome property he's got.
This is the gem right here. What did you say? 18K? Is that what you said?
18K, baby. Last month was 16. This month's 18. I think July we're gonna break 20 G. So, yep, 20K.
That's awesome.
Yeah. One deal.
Jordan, you got to do the Jordan shrug. Like, I don't know what to tell you, man.
And we're just replicating this, right? Like, boom, you get it once, you replicate it. You get it another time, you keep replicating it. So,
For sure.
All right. So, fractional partner. What is a fractional partner?
Hollis, do you want to start on this one?
Yeah. I mean, George hit the nail on the head. This is how we kind of executed this deal. You know what I mean? Everybody brings a little bit something different to the table, different role to the table, and then everybody owns a piece of the property. You know, you see this on what we'll call a small scale. Like this is an individual property that George and I took down with a handful of other people, and everybody owns a little slice, has their kind of role in it. But you also see it on a larger scale. You think about groups like, I think Fundrise is one. There are a couple of other groups out there that do, you know, fractional partnerships where basically you get to own a small piece of the property, and you kind of share expenses and things like that, and you share a lot of the roles and responsibilities. So it's a powerful way to partner, especially when you start getting into different asset classes, or if you know you have a specific expertise that you can bring to the table.
Yeah,
sure.
this works really well with like syndicates or like single JVs, right? So I like it, you know. So go ahead, Brian. I know you're going to say something.
Yeah, I think that fractional ownership is cool, especially if you're a seasoned real estate investor. If you're very hands-on, and you know you might have a portfolio of say half a dozen small multifamily properties. You could have some single-family homes. You could have some short-term rentals, and you really want to learn how a larger operator or sponsor executes a business plan at a very high level. And how they issue their K1s, and you know how they sell the property, and you know seeing the upside. I think that a fractional partnership is a great way because you get to learn how to scale your own portfolio by being an LP or being an investor in larger sort of syndication. I think it's super powerful.
Yeah, I mean, like, I would say on a fractional partnership, it's not really a structure, right? Like, it's more like, hey, let's create a partnership where we all own a piece, and how we structure it, let's figure that out. We don't know yet. It could be a joint venture, it could be an LLC with different partners, or it could be a syndication. There are types of fractional partnerships, right? So we're not specifically saying that you're not specifically saying, but it is syndication is one of the types, right? So
I think Brandon brought out a great point too about like the educational aspect, right? If you want to get up close and personal on a deal, on an asset class, right? Let's say, you know, George, somebody's like, oh man, I really want to get into short-term rentals, but I don't really know everything. I feel like I don't know enough to go out and do it by myself. Well, a fractional partnership could offer you the opportunity, depending on how it's structured, could offer the opportunity for someone to kind of get that hands-on experience, come learn a little bit, and, you know, take on maybe smaller roles or different roles that are a little bit more generic. And at the same time, actually learn the processes and everything that needs to be in place and build their team so that the next one, they don't need to be fractional. If they want to be 100% owner, they can run off and do it. But now they have the opportunity to be up close and personal and learn a little bit.
Love it. Yeah. So how about, I call this dream partnership. And typically what I've done with this is like, I have partnered with some of my clients, right? Mentorship clients. I've partnered with one-off strategic partners, and we've structured it in the form of a joint venture or like a LLC that's split at whatever percentage, 51-49 or whatnot. But for me, a dream partner is basically, I'm talking about the other person and myself finding a dream partner. So a dream partner in a sense describes someone that you truly want to partner with, right?
Mhm.
So for me as an operator, right, we already do a lot of deals. So when I started the syndicate world, started raising capital, and creating these partnerships, I nominated it dream partnership. For me is I'm looking for joint venture capital partners, right? So these could be some of my clients, this could be anybody that would be someone that puts in a capital to be able to fund a deal, right? Dream partner. And for them, it's one partner such as you, me, Hollis, Brandon, whatever. One partner, one entity instead of a bunch of partners. It's not so much fractional, it's more like 50-50 type of deal. But that partner, which is us, to them is a dream partner because we're operators and we know what we're doing, right? So where for us is like we need more capital to scale. So this becomes sort of a symbiotic partnership between two people. That's what I meant by dream partnership. But you could have a different view. So I'd love to hear your take on that, gentlemen.
Yeah, I think a dream partner has a similar personality type, because I think it's important not just from a business perspective, but you want to be able to speak with them and to just have a good conversation, maybe outside of business, similar communication style. I think that's huge. And then also from a business perspective, you want people who have complementary skill sets to what you have. So if someone is really good at executing that business plan, who can handle acquisitions, underwriting, asset management, property management, you need to find a capital partner, whether it's through the form of one LP or a few LPs. So I would say two things: to have the same sort of personality traits, and then also to have, complementary sort of skill sets within the world of business.
Love it. Love it. What do you think, Hollis?
Yeah, it's that's an interesting one because I had never heard of that terminology before you and I got together. So make sure you trademark that.
Right.
But you think about joint ventures. When I used to do wholesaling, all right, and wholesaling joint ventures are huge because usually the way that looks in the world of wholesaling is I have a property under contract that I'm looking to sell. And maybe Brandon's like, oh, yeah, I have a buyer who's looking for those types of properties. So it really is like a hand in glove type of a fit where I have a thing that he needs, he has a thing that I need, and we're able to combine powers. So really that's what it comes down to. If you're looking for that kind of 50-50 split, or the not so fractional, you want a bigger piece of the pie. It's just a matter of knowing what your skills are and finding somebody who has the complementary skills or who can, fulfill the things that you're missing, whether that's capital, whether that's deals, whether that's, project management, asset management, whatever the case may be. But I think to find a good dream partner, you have to be a good dream partner.
Yes. Give before you receive. Yep. Give before you receive. And dream partners, you share not just money, right? You share resources, expertise. You combine those resources. You share risks and profits. So, very similar to the fractional partnership, but in this sense, you've got more experienced real estate investors creating this types of partnerships with somebody that's newer or somebody that's coming in, and this potential strategic partner has the capital but doesn't have the skills. We would be a dream partner for them. And then we have more than one deal, two deals. We're ran out of capital. Real estate is capital intensive. We find them as dream partners because they can also help us with a few of the day-to-day things, operations. And they obviously the alignment has to be there and core values to me, and as well as making sure that the people that I work with are of excellence, right? They do what they do at the best possible way. They keep their word. They do what they say they're going to do. To me, that's a dream partner, right?
For sure.
Yeah. Okay, so how about a private money lending partner? So this is not a partnership. You're not sharing, right? You're not sharing the profits and the risks and all that. This is more one way. What do you guys think? Private money lending partner.
I love me a good private money lending partner.
I was just on a call with one.
Right? Yeah. Man, these are so from the lendee, right? The person who's looking for the private money lender. These are the people that are really going to help lever you up to the next level, right? At the end of the day, you can look at whatever YouTube, Google, blah, blah, blah you want. You're going to need some money to buy some real estate, period. It doesn't have to be your money, but you're going to need some money. And at the end of the day, if you're using your own capital, you will probably run out at some point, and you're going to kind of reach the ceiling where you can't really do more deals under your own power. And you can get money from the banks, but there's a lot of hoops and things like that to jump through. So finding a private money lender who's like a one-to-one relationship that you built, that you have, who's well capitalized, and that you can, structure deals backed by hard real estate assets with, that's going to be somebody who can really take you to the next level. And I've been using private money lenders for like 5 years now. Most of the deals I do now involve a private money lender in one way or another, always secured by a real estate asset, but it gives them the opportunity to beat the stock market. And a lot of people just like the idea of being able to invest in real estate in this way anyway, right? They're using a note, basically a mortgage note, if you would, for simple terms, a promissory note. And they're able to get a higher rate of return than what they may get if they just left that money in the stock market or just in a bank account. And for me, it gives me the opportunity to move fast on deals, to be well capitalized when I need to be. So I'll shut my mouth, but being a private money lender can be an excellent opportunity, and working with private money lenders as an investor is just what you need. It's the jam.
The jam. I love it. I love it. Yep. It's awesome though. But go ahead, Brandon. I'll close it off.
Yeah. So for 2 reasons. Number one, you're the first in the capital stack to get paid out. So there's a lot of underlying security. If you don't want to invest in equity, you could be a private money lender and be, there's a lot of underlying security. Basically, you might have some of the upside kind of capped, but you're in the first position, so it could be super powerful. And then also, just from the operator's perspective, you can close on deals a lot quicker than if you had to go to a mortgage broker or to a bank, basically.
Love it. Yeah. I love private money lenders. They are, and it's, for me, it's a relationship based, way to do business, right? So again, just to give a perspective, a private money lending partner, to give context on, for those of you who don't know what that is someone providing financing for us with a few different structures, right? It could be first lien position on your property, second lien position on your property, or just a simple promissory note with no asset behind it, no collateral or leverage. I have done all 3 of them. We've done, obviously, Hollis, you and I did a deal with a private money lender who's our friend here in Houston, Texas. And he was a first lien position. You brought the second lien position. They didn't even do a lien. There was just an agreement, right? So that was a no recourse type of deal. But because we have the relationships, we're able to build those types of deals. Like at first, most people are not going to loan you money without collateral. So you could put up your property, your car, if you own it all outright, or a second lien to your property if you have enough equity, right? So private money lenders they're out there, but they've got to make sure the operator, aka us, is able to pay back the loan through their own funds or through the equity of a property if you're doing it within a property, right? So mostly this is higher returns than normal. It could start at 8 to 10%. Interest only, maybe 15, maybe 20, 25. I've seen it up to like 30%. I've seen it like 20% a month, 10% a month. That's 100%, right, a year. So you could structure this in many, many ways. But just to close off, private money lending is our third type of real estate partnership. We talked about the dream partner, or aka the joint venture capital partner, or just a dream partner, and then a fractional partnership. Next week, make sure you stay on. We're going to talk about limited partner, aka passive investor. Right? We're going to talk about the active partner, like we are here in this group, mostly are active partners, right? And then we're going to talk about the relationship between a capital raiser and an operator partnership, right? So, fellas, any closing remarks here? It's been another great session of coffee and real estate.
Yeah, I think maybe we can do a separate series on some of this stuff, but talking about how to even become a private money lender, right? Because a lot of people maybe think they can't do it, but it turns out they can. It's just a matter of knowing how to structure it, how to find good investors to work with, how to be liquid enough as an individual, how to have enough liquidity to be a private money lender. So on that topic specifically, we'll set up another live and we'll break that down as well, because that's a great opportunity for people to get in the game.
Folks, drop us a value, #value in the comments or the chat if you thought this was valuable. We need your feedback. Obviously helps the algorithm, but also we'd like to know if you like these topics. And please just drop us the topics that you love to learn. I mean, we've done so many deals, especially, if we count as a collaboration, we've done millions and millions and millions of dollars in real estate transactions. So, thanks for being here every single week, guys. Appreciate you. And you want to close out, Brandon? Any final remarks?
Yeah, sure. First and foremost, thank you for listening. That's why we do these live streams, so we can educate people. But also, if you have any topics, just like George said, we're always trying to think about new topics within the world of real estate. But, chances are, if you have something that you're curious about, there's a handful of other people who would also be super interested.
Absolutely. And if you're listening out there still and you're looking to become a private money lender, we're great strategic partners for that. If you want to talk about, hey, maybe I'll become a dream partner. We're also always looking for dream partners. So let us know. Send us a comment. Drop us hey, I'm interested. We'll be happy to get on a call and talk to you and just chat, what these partnerships could look like. We have different structures going on at all times. We're always creating these types of relationships with people. But again, have a fantastic weekend, everybody. I'll see you guys next week. Peace.
Peace.